Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How was your week? Barely got that out.
It was all right. I mean, some of the longer term holds taking some hits, still well up on all that stuff for the most part. But yeah, trading was good. I mean, I've just been kind of locked into the crypto moves. They've been given enough range to kind of trade almost every day. The some of the the SPY QQQ moves, like you kind of see it coming. I think there's just a lot of waiting it out. I'm still waiting for some things to get to some levels. A lot of beat up software. I know, but no big hurry. But I think some setups will materialize there. So a lot of waiting around for me.
Nice. I always want to be positive to the situation, so didn't really have a word, but expected. I think that's the week I had. I expected week, so
Yeah,
which I mean, good mentally. That capital is still preserved. When you know what you're gonna be going into, kind of like a scary movie. You know, you see the guy coming, but the character doesn't. Um,
yeah,
but yeah, so I mean, you kind of touched based on the long term. I'll probably talk a little bit more about that. But a few weeks ago, I said, the short term was keeping up with the long term, so it didn't really affect that account size that much. Well, we're deeper in the system now of what's going on and just getting that pullback. So, but the day trading stuff, it's definitely not 8 out of 10. But there's still some plays out there that are marching to their own beat and moving off of news or whatnot, or just in a sector that, the FUD is positive for currently. And, not to toot our own horn, but we do a pretty good job at identifying, figuring that out. So, um, not to say it was possible to have, an A+ week, but it was possible not to be these guys fucking reconsidering their whole life on Twitter. I forgot what I posted
yeah.
midweek, what they were saying, but it doesn't have to be that way if you just stick to your process and not weather the storm, but understand the conditions and get through them. Not for the first time for us, once again, and not to go too long here, but pass it back to you after this. But I woke up this morning thinking about what's a good topic for voice, but we broke off of mop top room that we were in, that we kind of got promoted in, and started this one on our own. The first thing you brought up was oil, and then we traded through a shitty market for a year and a half.
Yeah.
Um, so that we're back here trading through oil and the markets, being kind of crappy again. You kind of just understand where things are going. So not that I'm like, yay, we're in this positive market, but um, I'm confident because I understand what we do and how we kind of pick things apart. Will be beneficial and get to where I like to be, which is early. So
Uh, yes. So yeah, two things. I mean, if you're wanting to follow the market day to day, those collab drops, reading between the lines on those, or asking questions, whatever. I mean, there's a lot of stuff that it takes off really quickly. The Rivian, and you might get kind of the pop and fade, but when they're posted, they're in a good spot where you can catch the pop part of that, and you get your 10 or 15% or whatever, and you can do that. So like these kind of short duration little swing day trades have done pretty well. And the other thing, with oil, for my accounts, oil was like 20% or something like that. I mean, it got as high as 45% through a combination of oil going up and stops being hit on, some positions. Not the not I don't have very many forever holds. There's a couple, but there are like software positions and things that it's like, okay, I'll go ahead and let this one go. And so then, I sell off some more oil and all that. And the thing about that sector is that it's going to stay, elevated and active for a long time, and natural gas is still there, and then there's the other side of the energy trade, which, and energy trade as a theme was kind of what I talked about last year, and we got into nuclear and all that, and did really well there. There's been lithium batteries, all have kind of had their moments, and so then now we get back into kind of um, the pure oil plays while the market pulls back. Solar gets really active. All of this is very familiar, so I think you're right about that. I mean, the first time, I mean, Enphase is in a much different spot now, of course, but Enphase was a great trade to the upside while the market was absolute garbage, for when we were kind of early in the room, and I kind of expect that kind of thing to continue. There's energy names that we talk about, and like renewables and um, all that stuff, and so it's all about power. It's the safer half of the AI trade because all of that AI shit needs power, and so utilities, the grid, like all that stuff. Those are really low IV setups and options, very clean setups and options, no pun intended. So there's some pretty massive opportunities, and what you don't want to be doing right now is hanging your head against the wall and thinking you're going to catch the bottom on Tesla, or even Nvidia. You don't want to buy those things to hold them for a decade, whatever, but very tough to trade those kind of names. And even the semiconductors are kind of all over the place. That um, ARM was in a really good spot, has done well despite everything that's going on. It's a European company, that's part of the reason. And then there's ones in the sector that have just been taking a real hit and not coming back. So it's not moving as a sector. It's all very fragmented right now, and that's tough to jump into as a sector. So to me, you want your big theme. It's energy, power, all of that, and then it's your outliers. What has a good setup in spite of everything? What is quote showing strength. So I don't really like that term that much, but what's showing strength as the market pulls back? What doesn't care about SPY? Your pitons of the world, or whatever. So we excel in this. We excel in this environment, and I think that it was easy to get kind of, I don't know, lazy, but market was in easy mode, right? And so the hard part there was feeling like you missed the move, and everything just keeps going up anyway. There's nothing wrong with being very um, selective. And I think people who haven't been through this kind of market since we did this room are going to see how you can use the work. And I think my focus is conveying that as best I can, and going into kind of teacher mode and trying to give more perspectives that people can latch onto.
Yeah, definitely agree with all that sentiment. The easy mode in the up market kind of sticks with me. That's for I mean the option, the money is kind of laid out as stepping stones in front of you. So confidence in those positions moving, like the all-time high charts thing, well, it's a little
Yeah.
different when I don't have any, share distribution ever, and you're seeing, millions of dollars laid out, $10, $15 above the price currently, or something like that, somewhere around there.
Right. Right. Yeah. Yeah.
So just a different look, but um, definitely agree. I've had that thought in my head. Like when we get here on the share side, it's a really tough game of wait. It's weighted out. It's like trying to hit a buzzer on the 000, and being the closest one to it without going over. And I always, that's kind of where the three candle thing came in, and I've been pounding that for a while, and will continue. But there's like I said, there's plenty of stuff where I guess my terminology, the well can't hide. that we're seeing do their own thing right now. So that kind of keeps you, not necessarily keeps the light on, but keeps you active in the market currently. Because I trade shares, so um, and I trade shares, and I'm cool with 10%. And if you're not, the options, to be honest, probably are better because those. I mean, when you said you'll get your 10-15%, I was like, yeah, that's a good share trade that'll get us through. Well, 10% in the option side, as long as you're the right time, can be a pretty big trade. So um,
Yes.
cannot be greedy. Share side was the whole point of that, and maybe the options are a little more not say I hate saying safer, but a little more playable because of I mean the sizing's gonna be smaller, right? You're not putting as
Yeah.
much money into options as you are shares, and the move's gonna be a little smaller. And I forgot your post this week, but it's fucking should be on the wall, should be said in here, but it's something like I don't like stocks that move. Um, oh, I don't like stocks that have to move 10%. I like the ones that have to move 3. I'm pretty sure that's what you
Yes.
said, something like that.
It is. Yeah. Yeah, and that's talking about the same stock. I mean, it's not even finding a different one. It's just the IV and Greeks and all that. It was MSTR. It's like there are times when the way the premiums are moving that you got to sustain these massive moves every day,
Yeah.
and you don't really want to be in that. You want things to kind of calm down, and Bitcoin did hit that point where around 70K things kind of slowed down a bit. It was on the kind of the big drop, from 90 to 60, and change. um, Even with those big downside moves, you weren't really getting that much out of it. I mean, you buy $800 worth of puts, and you get, it goes down, 8-9% or something like that. Yeah, you can double those puts, but you're holding through some little scam rallies in the morning, and overnight up 2% or whatever. It's swinging puts is very, very hard. And so it's while I do sort of like the downside for options sometimes, usually for me it's the short expiration hedge. You don't put very much money into it, and you put a little more into the calls at like a reasonable strike, and that's the only way that I know how to sort of play both sides and kind of protect yourself. The SQQQ thing that I had posted, that was when QQQ was at 620, and that was the spot to load up on that stuff.
I
And then you've kept, if you kept any of it, you're way up. But it's very hard with the 600 psych pivot. I don't, whatever that equates to in SPY. I don't follow SPY as closely, but it really doesn't mean anything for it to be 600 or not. But there is this kind of concentration of money there, and they're just moving in and out, and they're not picking a direction. And with that kind of read, the complicated part of it for me is always that when I locate these SPY contracts that we'll talk about in a bit, that I'm like, this is kind of the one. It needs a complement for me to read it, whatever. I mean, you have to understand that they have a lot of other shit going on, and that they're protecting themselves with that SPY position. It's not some big short, massive bet against the market. It's protection for all those other positions that they have that they're way up on, that they're selling calls on, as retail nimrods are buying the dip and all that. And so it's not, it's the opposite of the soap bar, the clean thing, where it's like they're concentrated on this stock, moving it to this price, at this time. So it's important to read that, but you have to kind of understand what you're doing. And I think the biggest flaw I see in people that try to use flow is that it's they just see a surge of volume and often short expiration, and they just get in a frenzy and want to, and want to just immediately follow that. There's absolutely no awareness of the big picture and in the current open interest framework. And I see that even within the site I use. They redo the layout based on what people are using and where the clicks go, and so they have like their little prediction market area now and heat maps and all this stuff like that. The existing open interest, it's still there, but it just keeps getting put on the back burner. And for me, it is the most important thing. That OI wake up concept, that they have these positions for whatever reason they got them a year ago or whatever. All of a sudden, you reach a price where those are relevant again, and that gives them so much flexibility to do whatever the hell they want to do from there. And that's exactly what happened with HIMS. So in the yeah, I'll cut it short here, but in all of this, what I'm saying is, like, there's so many seemingly dead January contracts and fall and even out to March and all of that, that during this pullback have significantly declined in value, and those are going to be the biggest key to what we read, and those are going to how we're going to make money 4 or 5, 6 months from now. So been through this enough to see that that's going to materialize.
I got stuck on one part of that conversation because it was important. Um,
Yeah.
but I've been in the class long enough, um, both as a TA helper and observer, and God, I almost feel like the dad you bring to school. That's all. And if we had a classroom, that's my position. Like someone brought their dad to school. That's what I feel like I would be. Like, sir, you can't do that in this school. um, anyway,
Yeah.
I've been here long enough because I've been here the whole time. Um, to know that how we evolved and the importance of understanding that. But like you used to kind of just trade the downside, and I'd be like, "What the fuck am I supposed to do with these?" And you were like, "Well, it's
Yeah.
going to be a good trade," and I'm like, "Well, it don't work for me."
Yeah. Yeah.
And through that evolution, um, there started being bigger gaps in the searches in the room. You would see, all right, like they had to take 6 months or a year off of the stock. Um, and then it'd come back up that we're at a level, or we do the coin thing, 200 ain't shit, and we'd come back to it, and we just kind of figured out that our system worked a little better, um, looking for that turn or waiting for that turn because it worked for everybody. um, but during that process, the whole point of telling you guys that, 'cause that should be obvious, during that process we did find stuff in horrible markets that were tradable from both sides, and it was that $30 candle. Like, well, find me a fucking $30 candle, P, because then I can take, I mean, lack of better terms, on a two, three, four, $500 stocks, I can take out $300. I mean, help me out over here. And
Yeah.
MSTR and a few others, Lilly, were like that. Deer maybe even along the way. So, um, not necessarily a style switch, but understanding how to pivot and use your style. And the reason that sticks with me is because that's really the time I was like, you know what, I can trade these $100 stocks, or 3-digit stocks, like I can the 2-digit stocks. I just have to kind of be, I hate to say it, but be comfortable with trading the 10, 20, 25 shares. I can't let that get to my head.
Yeah. No, yeah, yeah, absolutely. And the one of the things that we'll probably see that we're seeing stir a bit, is a China rally precedes the U.S. market rally often, and then the geopolitics currently of China, kind of interesting that, um, especially their cars, that there's countries that are going to just allow their cars in Europe
Yeah,
and all of that,
yeah, I'm seeing that.
and big 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 movers on news. And then, I mean, the follow through on all that stuff, I mean, who knows, but it's still like that moves a lot of those stocks, and you can kind of see those You see those setups and plenty of opportunity there. But China sizing is a term for a reason, and I think that you can kind of expand the China sizing idea to a lot of stuff that we're going to trade. And um, when I see a stock trading for $2.20 and your numbers line up, and I've got flow at three, 4, and 5. Um, great, great setup. I'm not putting 10 grand in this stock like that. So I mean, it's it's you just got to be fine with I mean me like I make a couple $100 on those setups and I'm good with it and I think you got to kind of get comfortable there and then I think the realization that this is a great opportunity. When I mentioned bringing up the long term account, this is kind of what I'm thinking that the the pullback that you're getting here, the one we got in April, the one we're getting now, not as steep, not as fast either, which makes it harder, but that you can scale in to some really nice positions that are going to pay off for you a decade from now, or are going to pay off for your kids, or whatever. And so you in all of this trading, like you don't want to lose track of that. There was a stat I saw. People always cherry pick this. We'll get to some boring stuff, but the with since December 2024, the market, the S&P, is up only 1.5%. I mean, do
What?
you feel like
That's a
you're only
lie.
up 1.5% in that whole time?
That's a lie.
Yeah, well, that too, right? Yes. So and they're, you know, the person. It's not like someone bought everything they have that day and then now they're up 1.5%. Nobody trades like that. It's like if you put $10,000 into Disney,
Oh, no, that's
you know, this many years ago, you'd still have $10,000. I mean, okay, but it's some bad luck if that's what you did. Because like we've done very well on Disney and it's coming back around um, again. So there are names to move in and out of, but still I think the concentrating your money within the market and the way I like to do it, I go like half ooh and then half of stuff I select because I feel like I have enough of a approach to this to pick good spots on the big names that you're going to keep you're going to keep a long time. So I wouldn't really change what you're doing if you're a long term investor. I don't think you even have to pile more into it as the market goes down. That's not always good psychologically either. But kind of your auto buys, your treat it like a bill stuff um, should remain a big part of what you do, and you shouldn't be too uh, caught up in doom scrolling to think you shouldn't be doing that.
yeah, I mean, there's a lot to unpack there. Um, as far as the long term goes, man, picking your spots I think is the best. Even if you only keep a few, it's just easy to get on the train and watch that long term growth. And for me, man, I mean, a lot of those entries don't come back. If you scale it all, your dollar cost average goes down, and you're definitely not coming back to that. And
Yeah,
it's about hitting targets after that for me for clearing whole positions out. I'm pretty diligent at that. Um, and then, because that helps me get back into the trades. But currently, um, the 1.5% thing, it's worse than that, P. It's like a 0.5%. But who buys the fucking top? Like,
yeah, yeah,
and I mean, I mean, if anything, you just made an argument against not picking your own shit. Um, because yeah, that's not much growth when things have had great moves since then. But there's a bunch of other shit to get into. I'm not going to sit here and talk about iShares and stuff like that, and or banking funds, but There's a ton of other shit to get into if you just want to, stack money. And I always explain it to people if you diverse that properly. You basically get half the move each way, and then make three
Yeah.
percent on top of that through dividends. I mean, that's the best way to put it. So, easier to digest stuff, I guess. Doing it that way, but yeah, I never got the all-in spy guy. Just never. I mean, again, you still got to know how to pick your spot in there, and it's pretty easy to pick your spot in there, but it's not for me overall. I'd rather pick the names like you're saying. Um, which yeah, gotta love pullback. Get back to where we are. Gotta love pullback. Um, because that's when those names are offered, and you're seeing that with a lot of them. And I mean, we're tapping a few. Last five will be epic in that today because you are going to get a lot of the stuff that just took a beating for no reason. So yeah,
Yeah.
back to the beating for no reason. 4 to 6 weeks. I didn't even said it. I have it as like my second note, but man, run the tape back 4 to 6 weeks. I mean, I don't sit here and act like I can predict the future or know exactly why, but I knew we was due for a pullback, and everything you said kind of was pounding the table that way. And pull back here to the 50 on the weekly. Got a week and a half left. I do have more information though than when I first created that thesis or said that out loud. And we're selling off into the end of this first quarter. Um, there's not a lot of sellers, not a lot of buyers. But the sellers are gonna dominate, especially with the war. But the volume's super low. So pullbacks never scare me when the volume's low. It's because people aren't leaving. It's just there's not
Yeah.
activity, and if you've ever been to a grocery store or any kind of store, if there's no one in there, they start putting shit on sale, and that's all it is. We've talked several times how the market makes money; they make it off transactions, and if people aren't trading shit, um, yeah, it's just not going to have a lot of volume. You get stuck inside the box, or said to it, not through it last week in the room because that happened about 4 or 5 times on charts. Um, it just is where it is, and I don't think we're out of the water. But for me, it's getting that opportunity, being early on the ones that didn't deserve it first of all, and are going to be
Yeah.
out of the gate quicker when we do turn back around. But zoom out on SPY. I counted like 9 pullbacks of 1 month or so since the last time we touched the 200 way back here. I mean, there's like 9 of these pullbacks in here. April last year being the worst. So I mean, it's still in a healthy spot, and we predicted it. So yeah, that's all I got.
Yeah. Yeah. No, absolutely. And the yeah, the thing about the lower volume that you just don't really even get the follow through to the downside. And the biggest frustration I see from people is the best move on SPY QQQ is overnight, and then the range is real tight um, all day, and you get these candles that seemingly don't make any sense, and they're just washing people around. So it's not a good environment to scalp options. And with the IV elevated, they're expensive, and the move you get, it doesn't really justify the risk that you're taking. So luckily those guys I'm sure have March Madness to gamble on for a while, but yeah, it's not good conditions for that. All right, so we'll get into some boring here. Copper pullback. Copper is now getting interesting to me. That we got the pretty bad week, I guess, and you're potentially going back to that mid candle on that previous drop, the $5 area. So you could go, I don't know, anywhere from 490 to 510 or something like that, and just watching to see what that wakes up in some of our setups. The my least favorite ones is probably the best right now, the FCX. I mean, I do like it. I just it's a little more SCCO is just so much better. But regardless, copper, aluminum, etc. I think uh, we'll see a pretty decent recovery out of this, but I wouldn't just hop in just yet. The And on that note, real quick, these long wicks on the day chart. What describe mechanically what that is for me?
Um, 499. Anybody? 498. Anybody? 497.
Yeah,
Anybody?
yeah, yeah,
496. Anybody?
yeah.
450. All right, fuck you guys. Back to five.
Right, right, yeah, yeah,
I mean, that's how I see it.
yeah,
That's what I'm
yeah.
seeing. I mean, look at your volume bar. That'll tell you. It didn't wick down there and that explode. That would be, or it didn't explode and stay down there, right?
Yeah.
So the low volume pullback. I'm not scared. Those last like six candles on this thing. Just look at it. I mean, you could see it building up to it. Don't focus on the candle that it happened. Look what happened before.
Right.
This low, and anyone that said it was on the sell side. So they said, y'all want to sell because they make this. Let's just say a penny to keep the math simple. They make a penny on every
Yep.
transaction. This is a horrible chart to talk about this on. They
Oh,
they
sure,
make a
sure.
they make a penny. So they just need transactions. They don't fucking care if it's 560 or if it's 540. They just don't care. They make money on the transaction. So more
Yep.
transactions, more pennies for them. No transactions, less pennies for them. They move the price around to get transactions. It's just like the Fred Meyer ad. They tell you, sometimes I look at that and it's like it's 4.99. I was like, well shit, this shit's normally 5.25. That's not even a sell. It's just not. So, but that 4.99 is
Yeah.
supposed to catch you.
Yeah, absolutely. And then we get into silver. Um,
Oh, can
getting
I
interesting
start? Can I
here.
start? Can I start?
Yeah, go ahead.
So gold and silver, Matt, I said it when we were at 125. This shit's not healthy, and the pullback, like it's horrible for the stocks. You definitely should have been taking your profit on the way up on the fat green candles, as P says. Um,
Yeah.
but this is healthy. This gold and silver pullback is healthy for the world overall. Like everything else is better if this gets back to reality. That's all I got.
Yeah, absolutely. And I mean the big conspiracy theory on gold is there's a lot of uh, Middle Eastern selling to free up money to whatever Illuminati, blah blah blah. I don't know, but no, yeah, I think that in terms of um, the price coming back 44 under 4,400, um, or like a 4,000 to 4,400 area, you're going to see some trades set back up certainly, and I think that one thing we talked about was with a move like that, the historic pullback days are going to be common, and you're going to or just the 5%, 3 to 5% downside will be kind of normal. Usually, it'll level back out before the day's over, but um, yeah, all that pretty much kind of expected this. We've approached gold and silver much differently than when we caught the move on it, so
I,
I expect all that to continue.
I didn't know then, but I did say it, and I made the connection now, so I'll make the connection for you guys. But I said a few weeks ago that we let Russia back on the SARS system or whatever it's called to trade, basically letting them trade the dollar again or use the dollar to settle debt.
Yeah,
And I really think that is part of this because the dollar is king again, or we're trying to make the dollar king again. Um, and you don't have to hoard gold and silver for the new monetary bricks thing or whatever. So I
yeah,
really think that just took the pressure off of it. I wish I'd have known it then when I said it that it was
sure,
gonna
sure.
that it was gonna correlate like that. But that's what makes sense to me.
Yeah, yeah, absolutely. I'm with you on that. And that's going to have natural gas implications later on too, by the way.
I keep the fucking bombs they're dropping. All right, well here too. Jesus.
So yeah, oil. The you know you I know a lot of oil guys. Um, Obviously, like the memes going back and forth, and you know landmen and their Ford Raptors and whatever. But the really, they don't want it to get out of hand because that's really bad for the world. So they always throw $200 oil out there and stuff like that, but you don't want some sustained, structured, organized move to pop over 120 and stay there. Like that's not something that you really want to see happen. But I do think that there's plenty of meat on the bone with a lot of oil setups, and it doesn't have as much to do with the price of oil as the concept of American energy independence and moving production up and midstreams and pipelines and cutting red tape. SOC, obviously, that's what that move was all about. So, there's a ton of stuff to read in this sector, and you cannot get caught up in the meme coin price action of oil itself.
Yeah, no, some good names, good moves. Glad to be in. Um, a lot of them. Thank you for Devin P. Appreciate you.
Yeah, yeah.
Surprised I didn't make your comments along the way because.
Yeah, sure. And all right, natural gas. I mean, just really parked down here and held down, manipulated, whatever. There's a big trade here, so I don't. You don't want to approach it in leveraged ETFs or anything like that, just because of the time decay. But plenty of good combo names, the oil, natural gas names. They'll continue to pop up, and on the real active days, yeah, you can day trade UNG if you feel like it. I mean, sure, but I don't really do that as much as I do. Just look for the overall sector, kind of after the big story here.
Yeah, there's better range of names for sure. I mean, when's the world gonna wake up and realize that we're not burning diesel to create electricity, and electricity is the ultimate need. So, nuclear and natural gas, and the runway on that nuclear is just so goddamn long that even in a stopgap, it's natural gas. And,
Yeah.
Yeah, I'm waiting for more stories. Like I've only heard one or two, but of like places telling people they can't have natural gas in their house, they have to switch to electric, just to funnel all the natural gas to the, you know, wherever it needs to go to create electricity. Kind of a weird angle, but in the long run, it's clean. So it's clean and it's easy to use. So I think we have the names, we know the names, and it's just a good complement to the energy sector for me.
Yeah, absolutely. And it's pretty clean for the environmentalists out there.
Oh yeah, yeah,
Yeah.
I really think that's why it wins.
Yep. All right. So then, yeah. Well, I'll go to lithium real quick. Yeah, continues to just sort of pop and regroup and pop up again. So this is gonna stay pretty active. So there's some names there to
And
follow.
the pullback in the names does not fit the pullback in this chart. We all agree on that.
Yes. Yeah.
Okay.
Yeah.
Trying to get better at buying higher than my original entry.
Right. 10-year. Well, damn, that wasn't what you wanted. So I talk about this all the time, that you just don't really don't want violence in this chart. So yeah, you're just looking for this to calm down a bit.
Yeah, I mean it's prospectively it's in a box. That's what we on here. Be a day chart, good stuff. We're in a box that's 6 months old, so we're just within this last 6 months. If you're a TA perspective guy, and yeah, with you, the quieter moves would be better, but it's not out of control. It's just pouting a little bit. 413. I just like to say that.
Yep. And so yeah, after a big surge like this, you kind of expect it's either gonna it should calm down a little. 4-6 possible. The weekend news seems to be, well, it's a little chaotic. I mean, the
Yeah.
de-escalation is out there, peace deal talk is out there, seemingly trying to calm things down, and then Trump tweets the opposite. So it's all over the place. But we'll see. I think the market's gonna try to pause for a minute
Yeah,
and absorb.
you got to dumb it down, P. I mean, just dumb it down to the basic fucking question: of what's going to bring money back into the market, or what's going to trigger to bring
Yeah,
money back into the market? And did anyone get that news this weekend? UNC out of the tournament. Did that do it? I don't know.
yeah, yeah, right,
I don't know. But I mean, what else you got? A
yeah,
tweet,
right,
a tweet that makes a 4 hour candle look good, not a day candle look good.
yeah, right, exactly.
That's a
Yep,
good one right there.
yep. All right, and then China, a little bit of a pullback here in the Hang Seng.
Bucks though.
I mean, you saw Baba drop. Hadn't touched that one. Still don't like it up where it is. I think there's better names.
It's a good. That's a
So
good. Like I said before, search the group, and when we stop talking about it, from when we were
yeah,
talking about it, and then that gap that happens, and when we start coming back around to it.
yep,
That's a great one
yeah,
because we haven't mentioned Baba for probably since the summer. Um, was the last time. But yeah,
yeah. No, exactly.
I just think
And
we're
so
early. I mean, we're just early here, P, and we need that. We need Trump to go over there, him to come over here, or something. Them to agree on something. I mean, it doesn't have to be, and it's not like some huge peace deal, you know, Abraham Accords or anything like that. But just like we agree not to, or we agree to this on some simple thing.
yes,
Maybe around the semiconductor chips with the FUD that just happened with that. Maybe we agree to not um, sneak chips around the border anymore or something like that.
right, right, yeah,
Maybe
yeah,
it can be something like that, but just that we're on the same page with them usually helps that sector. And we haven't seen any news like that in a while. It's more of us versus them, um, which again, that trigger to get the money to go into those ADRs.
yep. All right, so let's see, Bitcoin. Let me get to the current state of things. Yeah, so parked under 70, 72. Um, I sold most of what I had when it popped to there. So, um, you know, now we're down. Now we're back down 68. Longer it stays down here, the better. So you just kind of want this to get real boring. I think. If you were to get some kind of little flash crash to those lows that under that 60 to 62, something like that, that'll probably get bought back up fairly quickly again. But um, yeah, there's some setups here that will materialize. You don't want to be too early with crypto stuff, because you'll be
Well,
you'll be down 15-20% from your entry if you try to get too early with crypto.
on the share side, not trading coins, but just trading shares of stocks that mine coins, basically. um, you want to be closer to the pressure. And what I mean by that is that first big move down. The rebound out of that is really good, and in between that, it starts getting tighter and tighter. The ranges, like Mara, we did get some sevens. Now and it traded to 10. Now you're like 8 to 9. So it's a tighter range.
Yeah,
Tradable if you know the stock and you're not a greedy son of a bitch. But when we get to the pressure again, either to the downside or the upside, that's when the good trades are on the share side. For me, 72 currently resistance. Heard that number before. It can be support or resistance, people. Figuring that out save you 3 or 4 years in trading. Um, it doesn't look healthy to me. World talking about some pretty far down targets in this chart. So there'll be a time though.
yeah, yeah. Totally with you on that. Yeah. All right. So then, a little spy.
Ooh, 50
All right.
on the weekly. Um,
Yeah.
you got that 45, so I'm interested in what happened down there with all those numbers that are now, as you said, they would be out of trouble, or um, they'd be able to be get out of those positions from here.
Wherever they rolled some of the stuff, the like the 660 um March that just expired, whatever they did with that, I'll see early in the week. They're still operating around this June 630 number, so that's going to stay pretty active. But where's the complement to that fall? Is it several months later and lower? Is it May or April or May and higher? Like, it's just like I gotta just see what they do. Both, lots they could do, but yeah. So it's definitely a good time to keep an eye on this, and so that that contract I mentioned weeks and weeks ago. I mean, that's kind of one. So I'll be looking for its complement. I'll have probably more next week to say about that.
Well, nice. I'm sure it'll come up midweek in the room. Um, at 3 year, I like why I have the 3 years, because it does kind of break out short-term volume better than the 1 year, and doesn't get lost like it does in the 10 year. But there's a couple shells in here. 320, probably 25, 20, somewhere in there, and then the 36 or 35 to 40 range. So do expect a little bit of a fight if we do test that 35 area. Um, it bounced back pretty good um, Friday after hours. So um, the weekend news kind of dictates that move, and hopefully somewhere you'll see the flip. Um, for me, it's a time thing currently, and just getting to the end of the quarter. Um, they're profit taking to the end of the quarter is kind of my thesis. Just to say it as short as I can.
Yeah.
What we do after that, I think, will come up on your end. Whether they, start a tighter bracket, so to speak, because that's what I look for in a turnaround in the flow. That they do have some puts, but they also start building some calls pretty local. Um, so yeah, but then names are better. That's the last thing I'll say about SPY. I'm glad we're not trading this chart anymore. It's
Yeah. No. Yeah. I
been
do
a
too.
few years of that, so um,
Yeah.
yeah, I don't know, healthy too. That's about what I got on that piece.
Yeah. No. Absolutely. I don't really like sense any real way that they're positioning this. They set it up where they needed to actually to navigate these market conditions. So somebody saw it coming for sure. Um, all right, so yeah, that's it for me, and we can get on into the next one.
Perfect. Like and subscribe, people. Link somewhere.